So it was the end of the year, and instead of being productive with my associate Eric Gersch, we decided to have a little fun by Googling the most asked financial questions of the year. Let's just say Google did not disappoint. I want to warn you, I may have been feeling a little bit ornery and slightly opinionated. Okay, maybe more than slightly, but it was all in good fun. We laughed, we cringed, we tackled some big financial myths, and hopefully help make a few things clear along the way. I want you guys to buckle up and enjoy the episode.
Practice owners, tired of working hard but not seeing the financial results you deserve? I'm Eric Miller, and my best-selling book, How to Become a Financial Beast, is your game changer. Learn how to maximize profits, pay yourself right, and build wealth outside your practice. Download now for free.
All right, welcome back to the Financial Beast podcast. I'm your host, your BFFF, best financial friend forever, Eric Miller, along with
your BFFF, your better financial friend forever, Eric Gersch.
Eric Gersch. For those of you that don't know who we are, Econologics Financial Advisors, we specifically help healthcare practice owners show you guys how to acquire, control, and invest money so that you can generate some financial peace for yourselves and go out at the top of your game. You guys can check us out at econologicsfinancialadvisors.com.
And we help associates too.
And if you give us a like, share, subscribe, or reach out to us in any way, then you will achieve total consciousness.
It's a big promise.
That may not happen, but you never know. All right, today is it's the last day of the year. So we thought we would just have some fun. We're going to probably ridicule some things today just because we're kind of in that mood right now. And we decided that, what would be a good thing to do? And we said, well, let's go over the most Googled financial questions of 2025 and see just how completely ridiculous that they are. How about that?
All right, let's rip through them.
Yeah, we're gonna rip through these as fast as we can. So I don't know what you have on your list, Gersh, but here, first one I have is first most Google question, ready to go. How do I create a budget and stick to it? Okay. What's your answer to that one?
I mean, you list out what you make and you list out what you spend. And emergencies happen that push you over your budget. But generally speaking, from what I see, most people aren't going over their budgets because of emergencies. They're going over their budgets because they like to eat out and have fun.
I don't really care what you guys spend money on. I really don't.
And that's what I was going to say too, is like you should aim to make enough where you don't have to budget. And it doesn't mean that you can just be an idiot with your money, but if you make above a certain amount, as long as you're taking care of your savings and you're responsible, you shouldn't have to budget like, okay, I've got $100 a month that I can use for eating out, Yeah. So
where you guys need to focus on your budgeting is at your practice and making sure that you're doing the right numbers as far as what your targets and goals and everything need to be for your practice so that it's making enough money so that you don't have to worry about a budget for your household. Okay. Yep. So that's much more important to do this on the business side than I think on the personal side. And we'll just go to the next one. Second question I have is, should I save or invest?
Oh man.
All right. I mean, is this where we're at right now? Should I save or invest? Like, you save to invest,
right?
Okay. Like that.
The only delineation that I can make out of that question, in all fairness, is when they say save, maybe they're just talking about cash in bank.
Okay.
And simple answer, 90-day emergency fund. The rest can go in investments.
Yeah. And the investments don't always have to be super, super duper aggressive things. You can have, short-term securities. You can have, they're all going to be liquid anyway. In some, should I save or invest? Okay. Really, people? Is this what you're Googling this? This is what's important to you? Okay. What's the next one you have on your list?
So the next one I have on my list is, will mortgage rates go down in 2025? Well, we're at the end of the year, so we can answer this factually. Yes, they did. Not by a massive amount, but they did.
Yeah. So, and exactly what are you Googling that for? Because you probably want to buy a house or something like that.
Yep.
Okay, great. Are you in a condition to buy the house? Does your income even remotely allow you to buy the kind of house that you're probably searching for?
Yep.
You know, like there's so many other things you need to factor in on that one. But okay, my next one is what is a good credit score, dude? Seriously, people are like Googling what is a good credit score.
I mean, I guess it's fair if you're young, but if you're like, an adult above college age, you should know like 750 and above ballpark. I don't know.
Yeah. What they should be doing is they should go on our website. They should be taking our financial assessment because everyone's like, what my credit score is like indicative of what your financial position is. Has almost nothing to do with it.
Nothing.
All it tells you is that, what kind of credit or interest rates you're going to get when you borrow money. That's it.
Yeah, it's not a financial responsibility score at all.
It doesn't give you net worth. It doesn't show you your effective tax rates. It's not showing you your retirement numbers. It's just a freaking credit score.
Yeah. I tell everybody that because you can have millions of dollars and not use credit cards, and you can be a 600 and you can be drowning up to your eyeballs in credit card debt, and you can have an 800. All it means is how likely is a creditor to receive at least a minimum payment based on your recent history. So if you don't have recent debt history because you don't have debt, you're going to have a lower score than somebody who's drowning in debt, but they're just barely making those payments. So don't put too much weight on it.
Unbelievable. All right. What's the next one you have?
So the next
I'm cynical today. Jeez.
Yes. So, here's a fun one.
Yeah.
Should I be investing in cryptocurrency?
Oh, God.
I guess the way I would answer this,
What do you do?
I'm not going to give people a yes or a no. I'm going to word it this way.
Yep.
Should I go to the casino? Because generally speaking, cryptocurrency, from what I've seen, is about as reliable as the casino, especially, and I don't want to offend anyone here, especially if you're outside the Bitcoin realm. Bitcoin might be a little bit more stable. Everything else, you might as well go to the blackjack table.
I don't know. It was at 125,000. Now it's down to 87. So, it's all volatile. It is a speculative asset.
Yep.
You can say what you want about what the returns are. I mean, I hear people say that, it yields something. I'm like, how does it yield anything?
There are ways to get yields off crypto, but yeah.
Okay, you'll have to explain that to me at some other time then. Anyway, I mean, it's a speculative asset. If you got dollars that you want to speculate with it, go ahead. But it should be separate from, I think, your other, investment strategy, retirement plan.
Absolutely. I mean, if I go and I buy a stock of Walmart, what backs the stock price? Walmart's business activity, right? Their profits. If I go and buy a Ethereum or a Solana or whatever, nothing backs it. It's just hope that somebody else will pay me more than what I paid for it at some point down the road.
That's exactly right.
There's no business. There's no cash flow. There's no nothing backing it besides hype.
Yep. That's exactly right. Okay. My next one's in the category of debt management, and it may be one of the dumbest questions I've ever heard.
Oh, let's hear it.
How do student loans work?
I have that one too. I was going to use that next.
Okay. It's one of the most Googled financial topics nationally.
Mine says this remains the most searched financial topic.
Okay, guys, I just want to let you know how student loans work. You borrow money, okay? At some point in time, you have to pay it back.
I don't understand.
An interest rate. What?
I don't understand.
What is there to What is there to understand
I'm just kidding.
about student loans?
I'm just kidding.
I think what people are trying to figure out is, do I have to pay my student loans back? How long can I defer my student loans? What is the interest rate? How is that calculated? What's my payment?
Yeah.
That's what people are.
That and all the, like you said, all the different repayment options that are out there. They are kind of, I could see Googling that, but not just Googling how do student loans work. That's, yeah.
Yeah. And then the next one is what's the best way to pay off debt? You have that on your list too?
No, that one's not showing on mine actually.
Okay. So I mean the best way to pay off debt is whatever method keeps you motivated to stay on track with it, to be honest with you. I mean, we've seen all of I don't know. I mean,
I like the snowball method, but
15 different options of how to pay off debt, whether it's interest rate driven or balance driven or whatever. Okay. I think the best way is just going to be what keeps you motivated to keep on your plan, to pay it off. And knowing the difference between the destructive debt and the constructive debt and coming up with a payoff summary to do that.
Yep.
I mean, it's not hard. It's simple. It just takes discipline to do that. What's the next one you got?
That, and I'll add one more thing. The best way to get out of debt is to not keep taking on new debts.
Well, that's for sure. Yes.
So, all right, next one. Let's go down here. I think you'll like this one. What AI-powered finance tools are the best? I actually don't know.
I don't even know how to answer that. AI power tools are the best? Like, what are you trying to find out?
Yeah. I think, I know that there's AI, like, plug in your, I don't know, plug in your investments and they'll give their investment recommendations, but do I want to trust that at this point? Probably not. I mean, AI is,
I would use it just as an investment calculator or something like that. Say, hey, if I put X amount away at this rate of return, but there's investment calculators out there that'll do that for you.
Yeah, I don't know if there's really any. At least I should say I haven't to date seen any like AI finance tools that you gotta have. Not yet.
You could just go to ChatGPT. I've done this for a couple of things on just like, how does a spousal lifetime access trust work?
Yep.
How does what are some other more advanced strategies or estate strategies just to clear up like exactly what some of these things are? It's good for that.
Yeah.
Certainly it's good for education. It's not going to really do anything else besides that.
No, it's not going to solve your problems. It'll educate you though. Yeah.
No,
agree.
That's for sure. Oh my God. Okay, let me go to this one. I mean, we always get the investor pay off debt first. I can see that one.
Yeah, that's fair.
It's a dumb one. How much should I have? How much should I have saved by age 25? Nothing. Why are you worried about it at that point in time? Like you're just. You shouldn't even worry about the savings. It's like, what am I going to do to be competent and be an asset of society and myself and my family? Okay. And establishing good financial habits at that point in time.
Yeah.
Like worried about what you're going to have saved by 25, I think is like, who cares? I didn't care.
And especially for our client base of doctors, they're still in school at 25.
Yeah, you're not going to have anything saved at 25.
Yeah, you're still racking up student loan debt. So
yeah, all that stuff, all the things you should be doing right now is how am I going to be good? Either number one at being a good practitioner or something like that, a technical skill, or like how do I learn how to be a good executive or owner or something like that? Like how do I have a high business acumen?
Yep. That's
what you should be investing in before age 25. Like nothing else. What's the best strategy to maximize retirement savings? 401k, IRA, Roth.
They all invest in the exact same thing.
Yeah. Why don't you just do all three of them? You can do all three of them for in case your income is too high. There's not a best investment retirement savings strategy. I think I don't know. I mean, it's just such a dumb question. Sorry.
The best thing is to put away at least 10% of your income.
I was going to say the best strategy. I mean, honestly, if you have a healthcare practice, is to get your healthcare practice into a profitable condition so that it can sell for a lot of money.
Oh yeah,
that's a great retirement strategy right there as part of that.
Yep.
So
every dollar you increase your profit by is going to get you, say, $6 to $10 on the back end. You're not going to get better return than that.
You're never going to get a better return on that. Increase the value of your practice. The multiples in the healthcare industry are just going up, up, and up because private equity's taken over. They're killing everybody. They are. If you don't listen to me, listen to Tucker Carlson.
Tucker Carlson's going to save us all.
He said the same thing. How do I start investing when I don't have much money? God, is this the level of that we're dealing with right now? Come on. How do I start?
How about glass half full? At least people are asking.
Okay, great. Why don't you just look at more ways to make more money? How about that?
Because just go in the backyard and water that money tree.
What do you have on your list? Give me
I'm just rage baiting you at this point.
I know you are.
Here's a good one. Yeah. What is inflation?
All right. This is one of the most misdefined words, I think. Okay, because most people are just going to say prices going up.
Yeah.
And that's, I think, most people's definition of inflation. But in reality, for prices to go up, something has to happen. Okay. And that is when there is more money in supply than there is production occurring. So that's the actual definition of inflation, is that there's just more money. There's more money versus products and services in an economy.
Money printer go burr.
That's right, buddy. And then that's what causes. And then deflation is the exact opposite. Yep. When there's more production occurring and there's not enough money. And then you'll have a deflation. Then you'll have a lowering of prices.
Yep.
That's it. That's as simple as that.
Yep.
So you just got educated. What's next?
Well, here we'll continue on a similar note with simple questions. Yeah. What is compound interest?
You go ahead and answer that.
Compound interest is when you earn money on your returns. So say you got $100 and it grows 10%. Now you have 110. You earn 10%. Now you got 121.
Yeah.
It just builds. It's like, think of it like rolling a snowball down a hill, right? Each time it rolls, it adds another layer.
I mean, I saw some guy that talked about how compound interest is like a dumb concept. You shouldn't worry about that. And I'm just like, early on, it really doesn't make that much of a difference. But I'm telling you, when you start hitting like certain levels where you got $200,000, $300,000, $500,000.
Oh yeah.
Like, it makes a difference.
Yep. Yep. Big numbers accumulate fast.
Oh, that's right. So, I mean, is it something I think it's not unimportant. It's unimportant when you don't have much money. Like, we have some people that are like, well, you only made 5% on this account that's got like $15,000 into it, and I'm like, what do you care about rates of return on that? Give me a break.
Yeah. It's not going to change anything.
Care about, or I got five, and I'm not putting any money into this thing. Like, do you think that it's ever going to be anything substantial? No. Yeah. But when you have a lot more money, compound interest does make an impact.
Oh yeah,
for sure.
Yeah.
Okay. Next.
Let's see. I'm looking for one more. Is 2025? Well, let's reword that. Is 2025 or going into 2026 a good time to buy a house?
Okay. I mean, I think a good time to buy a house is when you, how would I answer that? I don't have a good answer.
You know what? I think that I'll add a disclaimer, assuming somebody's in financial condition to buy a house, because
there we go.
When you buy a house, right, you buy maintenance. And I am learning, or I shouldn't say I am learning. I have learned that dearly over the years.
You're learning that right now, aren't you?
Yes, I'm always learning that. That's part of owning a house, is the maintenance literally never stops. And yeah, it adds up. But anyways, best time to buy a house. Look, a house is, generally speaking, a long-term investment. The best time to buy a house was yesterday. The next best time is tomorrow or today, assuming you have the financial condition to do it. You don't buy a house because you think it's going to go up in value and you're going to flip it for profit in 2 years. You're buying a place to live. You're buying a place to make memories. And if you're there for 10, 15, 20 years, in all likelihood, barring some 2008, you're going to make money. So
yeah,
that's my answer. But I know you probably feel a little bit differently. Maybe.
No, I'm okay. I think that's probably a pretty good analysis right there. I just don't know that there's ever a perfect time.
No, because we can't. It's almost like asking, when's the best time to buy into the stock market?
Yeah,
I don't know.
That's another thing too. I don't know.
If I knew, I wouldn't be working.
Yeah, I really don't. It's the same thing. I mean, it's like, I'd like to be able to say that there's entry points, and I mean, I've had clients that have had really good entry points into the markets, and I've had clients that have had lousy entry points into the market. I wish I can control that.
Yeah, no, me too.
Like, what? Everyone's like, hey, is it a good time to invest in the equity markets right now? I'm like, I don't know. Okay. It all depends on, like, if we're talking about a 10-year time horizon, which, I think you'll be surprised. My viewpoints have changed on that. It's probably a good time.
Yeah.
Doesn't really matter. I mean, you can dollar cost average for, if you're really worried about it, for over maybe like a 6 month to a year period, in case you're worried about some volatility, you could totally do that. And, but what are the chances that your accounts are going to be higher in 10 years?
Substantial.
Pretty good. Yeah.
Yeah.
I mean, it's pretty good. Probabilities are pretty high that it's going to be higher.
Yeah.
So, that's when you start.
Yeah.
So it's just like, no advisor is going to be able to do that. No. Another question is, what do I look for? How do I hire the right financial advisor?
You go to Econologics.com.
I mean, that's kind of simple right there, isn't it? Yeah, you just go to Econologics Financial Advisor.
No, you look for somebody, outside of that, you look for somebody who, number one, is a fiduciary, which means that they have to do what's in your best interest. Believe it or not, there are advisors who do not. And then I think you look for somebody who has experience in your field, right? If you're a vet, you want somebody who's familiar with vets. If you're a CEO, you want a guy who works, or a person who works with CEOs. There's differences in every industry. Military. There's a perfect example. There's guys who specialize in military because there's so many levels to the pensions and the disabilities and I don't know that stuff.
I don't either.
But I can tell you a hell of a lot about a vet practice or a dental practice.
Yeah, so we can show you how to supercharge your retirement much better than some Edward Jones guy is going to tell you what to do, with your retirement, which is just put in more, put in more, set up retirement accounts and do all that. It's not unusual for us to like when I say supercharge, I mean, we supercharge vet healthcare practices retirement.
Oh yeah.
We supercharge it, because we're showing you how to do things from the practice that none of these other guys are going to do.
Yeah, no, I mean, off the top of my head, I would say we're getting clients to save probably close to 7 to 10 times what their peers are saving.
Yeah, exactly. And really without like disrupting what their lifestyle normally would be.
No.
Because again, we understand how the practices work. We understand how to take money out. We understand where that money should go and setting up a strategy and all that. So it's just, it does make a difference. I'm going to flip over just a couple more questions. I'm going to go to Fidelity's top 25 questions. Right.
All right.
And then how do I protect my investments and retirement accounts during economic volatility or market downturns?
Well,
how do you think about that, Gersh?
I think number one, your time to protect your account, if you decide to do that, is before the market falls. Because I see so many people over the past who are in stocks, the market falls 10, 15%, then they switch to cash or bonds, and they're shooting themselves in the foot because they're not going to ride it back up. So, number one, if you don't do it early before the crash, you don't do it at all. Number two, I don't want to sound like a broken record from a financial standpoint, but it goes back to diversified investments.
Well, I was going to say, just making sure that you have a defensive portfolio already set up, and that whether it's 70, regardless of what it is, I mean, that's one way to do it is like, if you're worried about market volatility and you're 100% in equities, then okay, like, what are you doing? What do you think you're going to do to protect yourself against market volatility? You're not.
Yeah, you're not.
Right. So that's done on the allocation end.
Yeah.
To present to do that. The other thing is just looking outside the box at other types of strategies that are out there.
Yep.
There's insurance contracts, there's annuities, there's private investments, there's other things out there that you don't have to invest all your money in marketable securities. I mean, there's other things you can do.
Yeah, and that's what I was referring to when I said diversified investments. It's not just stocks and bonds. It's stocks, bonds, real estate, annuities, life insurance, private equity, blah, blah, blah.
But your fee only guys that you guys run to and act like they have this holier than thou indignation about anyone that
does anything outside. Yeah.
Outside of that is like, oh my God, I can't believe that they're charging you for that. We would never do that. Give me a break.
I just real quickly, this just jogged my memory. I have someone I'm working with right now who they're with a fee only guy, and they moved money over in 2022 at the bottom of the market. So they've gotten 20% plus 3 years in a row for returns. And they're like thinking this is the best thing since sliced bread. And I took one look at the statement and I'm like, dude, you have $0 in anything but stocks. This was not, you just had good timing. He's not a genius. You just had luck. When that market crashes, though, every penny of your portfolio is going to get hit.
Exactly.
So
they were like, there's a good,
and they're at the end of their career.
Yeah, exactly. That's where the help actually. There's a good video of like some huge train, like those underground trains that was moving, and there was some guy that was just like making sure like the door was shut, and then it acted like he was like the train was already in motion. He was just looked like he was like assisting the train through, by just touching it,
Yep.
and then the meme was like, these are like financial advisors using index funds. It was like, you know what I mean? You get it. It was like,
I get it.
They were going to do what they were always going to do.
Yeah, exactly.
The advisor didn't have anything to do with the returns or the motion or whatever was happening there. It was just kind of funny.
Oh, no, I get it.
Okay. I think that's what are the well, let me see if there's one more.
Yeah, pick one more. Let's give one bonus one.
How can practical steps? Let's see. How do that one we already did. That one we already did. What are the possible tax implications of major financial decisions like converting traditional IRA savings to a Roth, selling property, or using tax loss harvesting as a strategy?
Wow. My answer to that is way too complex of a question to give a blanket answer. That is a very situational based.
I will say, look, would we want? Is it a good time to convert IRA money? It depends on how much time that you have with that to do that. Maybe if you have some big tax deductions that you can use to offset what the income would do, recognizing that income, there could be some validity to that right there. So again, it is going to be completely situational on that one. Putting money into a Roth IRA, I think is we hear that all the time. We just kind of okay. I think, if you have a 401k that offers a Roth, I would definitely do that because it allows you to grow as much tax-free income as possible.
Yeah.
The whole backdoor Roth thing, I get. It's like, but again, it's $7,500 a year, right?
Yep.
Is that the most you can do?
Yep.
Like, it's gonna take an awfully long time to accumulate money.
No, the Roth 401k is where the power is.
Yeah. So anyway,
it's where the power is.
It's where the power is. I understand, Gersh.
Maybe something.
All right. Those are the most Googled questions right there. I think we hit them ad nauseum. Look, there's no bad questions, even though we kind of make fun of some of these things. You guys should be curious. You should ask questions. You should, but most importantly, you should have a good financial team that you can bounce these questions off of, because they can't be too general, and I hate saying it, sounds cliche. Everyone's situation is different, but it is. Everyone has different numbers, different things they want to accomplish. So, but having a good team that knows you, knows your business, knows what your end game is, that all those things are so super valuable. So you should have that.
Absolutely.
All right, guys, let's have a good 2026.